Barclays is exploring use cases and frameworks for a digital pound in the UK. And so in this video, we're going to look at how the British bank is exploring merchant payment integration and securing delivery-based transactions with blockchain-like security to enhance trust and prevent fraud. Hi everybody and welcome again to another episode of Enter Crypto with me, Chris Kenyon. Now in today's video, we're going to be looking at how Barclays is actively exploring how the CBDC or digital pound could be implemented into the traditional banking system. So as always guys, let's jump straight into this article. Let's give it a quick read through, see what we can learn, and then we'll comment after. So Barclays is exploring the design and use cases of a digital pound, aiming for seamless integration with commercial bank money. In a recent paper, the bank explored communication and interoperability to ensure consistency between the two money forms. It outlined a focus on three key use cases: person-to-person push payments, merchant-initiated payment requests, and securing funds for payment upon delivery. These show how a digital pound can operate alongside traditional money while ensuring consistency and preventing fragmentation. Moreover, the paper suggests that a financial market infrastructure, or FMI, could provide essential services. This would streamline management for both the Bank of England and digital pound providers. The paper also discussed functional consistency. It focuses on ensuring digital pounds and commercial bank money work similarly in daily transactions, and this consistency is crucial to avoid fragmentation in the payments market. Without it, different forms of money could operate under separate rules, causing confusion and inefficiency. The bank is also exploring how merchants can integrate payments into the digital pound system, and it's examining how to secure funds for delivery-based transactions, increasing trust in both online and offline payments. This approach would add blockchain-like security to everyday transactions, and it would also strengthen the system against fraud and transaction failures. The paper also examined the wider impact on the UK's financial system, suggesting that a well-designed digital pound could drive innovation in payment, and it's expected to integrate with existing systems like the UK's faster payment service, ensuring a seamless connection with current financial infrastructure. The Bank of England and HM Treasury are working on designing and exploring a UK central bank digital currency, or CBDC, including real-world tests to assess its practical use. The decision to move forward with a digital currency will depend on insights from the design phase and the development of payment services systems in the UK and globally. Should it receive approval, the design phase for the digital pound is projected to continue through to 2025 and 2026. This is according to UK Parliament projections. And so there are several intriguing aspects regarding the development of a digital pound and its potential impact on the UK's financial landscape, one of them being this fusion of traditional and digital money. Barclays' exploration of how the digital pound can coexist with commercial bank money is particularly interesting in my opinion. Rather than proposing a separate disruptive currency, the digital pound is envisioned as complementing this existing financial system that we all use today. And so what Barclays are trying to focus on here, and other banks will be in the future, I would imagine, is this kind of idea of functional consistency. So they want to ensure that the digital pound is working similarly to the money that people are already familiar with now, that we use, with our bank accounts, that we pay our bills with, that we receive our wages in. And it's actually going to raise quite a few questions about how digital currencies, in this case the CBDC, can integrate smoothly into traditional banking structures, which is what they seem to be looking to do here, rather than just overhaul the entire system. It looks like they're going to look to try to integrate it into what we've already got. And also with them trying to, basically giving sort of three practical use cases: these person-to-person payments, merchant-initiated payment requests, and securing funds for delivery-based transactions. It highlights that this whole idea of a digital pound isn't just about technological innovation for them, but it's actually about solving specific everyday issues in payments. And so by addressing the trust and security in a delivery-based transaction system, it's kind of, for them, it's kind of mirroring blockchain's potential, but without, fully decentralizing the system or not decentralizing the system at all, which in their mind will make the digital pound more accessible to everyday users and businesses. And the way that the bank and the government are trying to sell this CBDC, this whole idea, is how many governments around the world are trying to sell it. And that is that this digital pound or this CBDC is not just some kind of technological project for the government. It's a potential economic game changer, is what they would like us to think. And so Barclays and the Bank of England appear to be considering how this new form of money, shall we say, could influence the broader financial market infrastructure that they talked about, this FMI, helping the entire financial ecosystem become more resilient, more efficient, more inclusive. This is all the type of rhetoric that they're going to use, and they're going to keep doing. This is a campaign, they're going to keep using these types of words as we go forward into it, because they want it to be adopted, obviously. And eventually, it goes without saying that this is going to extend beyond payments. We're only talking about payments right now, but this is going to influence lending, investments and investing. It's going to, liquidity management, all within the UK's economy. It's going to touch on everything, as you can imagine, as it grows and grows and grows. And I think that the banks also know, with them exploring this kind of merchant integration that they talked about, this is another highlight for them. They'll want to get this across because one of the main barriers to wider crypto adoption is, whether we like to admit it or not in crypto, it is merchant acceptance. Shops and, places of business, not enough, certainly in my opinion, accept crypto for the services and for the goods. So this is a problem that we've got. The banks know it, and so for them, if they can target this, then it's all good for them. And so by focusing on how to make the digital pound seamlessly available for everyday purchases and business transactions, this CBDC can rapidly gain traction in a real economy. And that's just something that crypto struggles with because of its volatility and because of its complexity. And it's one of the main reasons why it's so important not to just sit and learn about crypto, which is very important, but to use it. It is a savings tool, it is an investment, but it's also a currency. We should be using, trying to get people to accept crypto and accept Bitcoin as payment. So, but all in all, this article is interesting because it explores kind of this hybrid approach that the Bank of England is taking along with the commercial banks like Barclays, and it's bringing together the best of both worlds, I suppose, is what they would be saying anyway. You've got cryptocurrencies, innovation and efficiency, as they're trying to say, and whilst you've got traditional banking stability and regulatory oversight, whilst also focusing on real-world applications that can, reshape payments and financial markets in the UK eventually. That's what I've got for you today, guys. As always, thank you for watching. Thank you for listening. Don't forget to like, subscribe, and click on the notifications bell so that you don't miss out on any future updates. And I'll see you all tomorrow. Take care.